Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Back by popular demand is our Grade Your Portfolio segment that I like to do from time to time, but y'all were asking for this, so I wanted to go ahead and provide it. Today we're going to look at Shane Hess's portfolio here. I'm just going to go out and assume that you're a fan of Ohio State. That's just a guess based on what I'm saying here. You know I'm a big college football fan. But anyway, I'm going to give my thoughts. Now, remember the rules here in context. So remember, number one, normally you would see me, but I'm still on vacation in Miami, but I wanted to go ahead and do this since y'all were asking so nicely about this particular segment. So come Monday, everything should be back to normal. But I'm taking a little bit of time from the beach to provide what I think will be some great educational and investing content. I also don't have my regular mic, so I might sound a bit different as well. All right, so remember that this is just for our education purposes, gives you a look into my mind when I am looking at a portfolio. We don't know whether this is all of Shane's money in the world or if it's just a portion. I don't know the goals or anything like that. So I'm just giving you my perspective and first look at, hey, this is what I think about it, and here's what I would change if this were me, based on, again, what I'm looking at and what I know. All right, so the very first thing that I noticed here that I liked was that immediately my guess would be this is someone who is focused on playing defense, somebody who is focused on probably getting some quality dividends, and is probably doing a lot better than most investors, to be quite frank. And here's how I know that. Walmart is somewhat of a defensive stock. Procter & Gamble, we know, plays a good dividend. Pepsi's defensive. Many consider McDonald's to be that. I know Johnson & Johnson pays a good dividend. I know Hershey is a stock that is in the green this year, at least at the time that we're recording. I know Coca-Cola is really good. I might even invest in Coca-Cola come moving day, which is just next week. American Power is good. I did an entire breakdown on AbbVie for our members only, so feel free to check that one out. Then we've got a good index fund here. We've got a dividend ETF. And then more of my long-term favorites, Microsoft and Apple. So this portfolio is already starting off very, very good. But there are a few things that I would change, or that I would at least adjust. So let's take a look at a few of those. So one of the things that immediately stood out to me is that first, if this is a defensive portfolio, I think you're in a good spot. Okay, that just flat out, if you're focusing on defense, I think you have done an incredible job of doing that. However, if I am looking to make just a small tweak here or there, here's what I might consider. So Verizon, for me, I understand, and I think we all know this, Verizon for a while has been one of the top defensive stocks that pays a solid dividend in the telecommunications space. However, I think that T-Mobile, TMUS, and AT&T are far better in terms of performance based on the information that we have right now. And I'll go and show this on Yahoo Finance in just a second. But if, unless you've been in Verizon for a while, but even so, I would even venture to say over the last maybe even 3 or 4 years, maybe AT&T, but probably definitely T-Mobile has performed a bit better. Now, T-Mobile doesn't pay the same dividend as AT&T does, but I think those are going to be better to the short or medium term than what Verizon has done so far. The other one was American Waterworks. They just have not performed as well as I thought. I think even one of my kids owns this one, and it's, they do water, right? Which is a spot that, like American Electric Power down here, you think water and electric want to be one of the last things to go. You would hope that American Waterworks would follow suit and not be that far down. That just has not been the case. But these are really the only two areas. So what I want to show you real quick for Verizon and AT&T is this. So I'm going to go, this is Yahoo Finance, and this is Verizon over the last 6 months. So if I compare that to, let's just compare it to S&P 500 first, just to give us some context. Okay, so Verizon is doing better than the S&P 500 in the last 6 months. That's good for Verizon. If I go back and look at the entire year, again, -8 compared to -11 over the last year. So Verizon is beating the market, but we want to zoom in and have just a little bit more context, right? Because Verizon is not the only cell phone company that's out there. So let's take a look at T-Mobile, TMUS. And let's take a look at AT&T. All right, so over the past year, they're all very close. But again, Verizon is the last one at 8.4, -8.4. Over the last 6 months, this really starts to spread out. And you see T-Mobile up here at, okay, all right. So I'm doing this during the day. So this is around 2 p.m. on the 23rd of June. So T-Mobile just hit another jump at 12.81% compared to 9.16% in the last 6 months, whereas Verizon is still negative. Now, compared to the overall stock market, it's fine. It's even up 2% as of right now, very close to 2% as of right now. But if I have to, based on recency, and even, more so long term, there we go. Even more so long term, Verizon just isn't there. Now, while I don't use like the 2 or 5 year to really kind of gauge where I am and what I should be doing, even if I look at this, I mean, T-Mobile, 25%, AT&T down -7 compared to 2. So it really depends on what time frame you're looking at. I really use 1 year and 6 months because these are things that are happening like right now, right? 2 years ago, it was a completely different scenario than what we were, what we are now. Whereas 6 months ago, we kind of, we know more, is more informed than where the market is currently. So in either case, if you want to switch that out, or if I were in this situation, that is something I would heavily consider is, do I want to switch? Can I get something better? Can I get something better? And I think for Verizon, I probably could. For American Waterworks, I'm not entirely sure if there's a good spot that I can switch out of. But it's down significantly. I think when I checked, let me grab my notes here. When I checked, they were down about 24% over the last 6 months and down 13% over the last year. And we just saw what the stock market was. It was doing a little worse than the stock market in both categories, 6 months and 1 year. But I don't immediately know of any great places to replace with that in the same way that I know or feel that Verizon and AT&T can. So that's really it. I mean, you can hold it, you can keep it. American Waterworks, if you want. I think that is probably the only weak spot here. But other than that, you got a good, strong portfolio here. Very focused on defense. So if that's your purpose, I think you're good. The other thing that I would consider is you already have 2 growth stocks. 2 stocks most people would consider growth for the long term, which I think is a good move to make. And let's say that while I don't know whether or not this is going to happen, but let's say in the next 6 months the market starts to recover and things are on the upswing, then your portfolio is not going to grow as much, right? Procter & Gamble is not known to make double-digit gains. Johnson & Johnson, McDonald's, they're not known to just, make 15% in a year, not in a normal year. So to kind of give yourself a little bit more exposure, assuming things are going to take off later, again, I don't know when that later would be. Maybe you want to have another growth stock just to kind of, quote unquote, buy low now so that in the future, a year from now, 2 years from now, it's really going to pay off. Maybe that's a Google. Y'all know Google's one of my favorites. Just to maybe I'll switch this out, play just a tad bit less defense and switch to something like a Google just to give you just a touch more tech to kind of help you grow in the future. It's not going to help you right now, in my estimation, but I do think it can help you down the line. You don't have to do that, though, because you do own right here, and I don't know how much of it you own. You already own VTI, which has Microsoft. It literally has everything on this list. So you don't necessarily have to do that, but since you already own Apple and Microsoft, I think Google might make a bit more sense there if you want to switch out of American Waterworks. But I mean, this is solid. If you are looking for defense, I really don't see that many flaws. I think two, if I look at it, you have, what is it? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. You have 15 different positions. I think this is manageable, especially since 2 of them are ETFs. So you're really looking at 13 different positions. I think this is manageable in terms of what you can research, what you can understand. I think you can easily understand every company that's here, which I like too. I mean, I gotta get this an A. I have to give this an A. And I was trying to figure out if I want to go A plus here. But I'm gonna give you a solid A. The only reason why it's not an A plus is maybe we could have had just one more stock. I'm really being a tough grader here, but I'm giving this a solid A. I'll have to go back and check and see if this is the highest grade I've ever given. But this is good. This is very, very solid. If you told me I'm a defensive investor and I'm focused on dividends only, and that's just who I am, that would definitely give you an A plus. But I don't know that, right? I'm assuming that looking at the portfolio. But again, this is a solid A. It's a very, very good effort. If a client came to me and said, "Hey, here are the stocks I have," again, if I'm touching anything, it might be Verizon and AWK. That's it. I mean, that's not even a whole bunch to be mad about. So very good job here. It looks like you are really paying attention to what's going on to the market. You have companies that I think you can understand, which is good. And I think you're in a good spot, especially now, based on how the market is. So well done. Well done. So next week, I have someone else who messaged me about what they wanted me to grade their portfolio. So I'll take a look at that, and hopefully we can do that next week. As you know, you should definitely sign up for our members only content. We do breakdowns. I did an entire breakdown, I think it's almost 10 minutes or so on AbbVie, what I like about it, how I am looking at it, and where I think the company could go. We do videos every single week, so you want to make sure that you do it, that you sign up for it, and it is exclusive for our members only. That button to join is in the Join Now tab, also be in the description below. All right, that is it for me. I will see y'all on Monday.